So good afternoon, good morning, good evening, everyone, depending where you are. It's record numbers today for this webinar series, and deservedly so. I would say it's my great pleasure to welcome Sean Cao from Georgia State University, who will present today. And paper is very exciting. It's on the corporate disclosure in the age of AI. So Sean will present for 30 minutes. And after that, we will have Tim Loughran from University of Notre Dame giving his comments for 15 minutes, and we'll spend the residual with open Q&A with the audience. But you don't have to sit on your questions until the end. Please submit them through the chat, and I will keep an eye on this and make sure that we go back to any open issues when it's time for Q&A. So with that, please, Sean, unmute your microphone, and the screen is yours for 30 minutes.
Okay, excellent. So I'm going to start, going to make the best use of the 30 minutes. So first of all, I'd like to thank to Macau invite me to the seminar. I know I'm supposed to be in Sweden presenting a paper with Tim. So so yesterday I was checking online, just search where I should visit when I'm in Sweden, and I was expecting like a synthetic view and something, and IKEA pops out, and that makes sense to me. It's a great place, catch up, and so yeah. Before I start, just like to introduce the team. So this is I work with this is project with Wei, Baozhong, and Alan. These are great co-authors and friends, and so Alan is a PhD student at the GSU, and he's on the market right now. So we worry about the coronavirus, the job market. So just before the presentation, if you guys have any information or you guys are hiring, just keep an eye on Alan. So so this is about the team. We have been circulating the paper. We receive the feedback. We revise back and forth, and so I enjoy the process pretty much. It's like a family resolve some puzzle or board game, and naturally we have the paper, and also I'm happy Tim is here today providing feedback. And as you guys can see, a lot of tests we have in the paper heavily built on Tim's paper, and in the slides I will also talk about some of our findings regarding Tim's GF paper in 2011. So I like to I always like to connect the audience with some of my personal experience. Before I jump into all the disclosure, SEC filing, and all the academic world, I would just want to share my own experience with you guys. What's happening? What I've seen in my life. So I have some. I'm working on machine learning and fintech for a while. So what I found is I keep receiving those ads on my YouTube, on my web browser, and the Google search. So I realized that my life is not just sometimes not that private to in the age of the machine. I feel like the machine is tracking my searching history and knowing what I'm doing. So so I have the ads come in. So what do I do? Simple. I just turn off the cookies from the browser. I want to make my self a little bit private, and so I can. This is what I do while I know machine is watching my life. So going back to the paper, this paper is about in a corporate setting. So what do we do if a manager is listening to the corporate disclosures? So what do manager do? This paper is motivated by several journals, one from Wall Street, another from the this is I think CFA journal. So basically we start a project with the Wall Street Journal. We find the article and shared with us, and we started the project when we help us navigate the directions and the channels. So it's kind of happening in the real world, like because of the rising of the machine and algorithm trading, and there's a increase in the readership in the machine relative to human. So the idea is, what do managers do? What do managers respond to this new crowd of audience? And the great thing about this article is, actually, what I found is, I really like Wei's approach when we start a project with some general articles, some anecdotal evidence. We found is like the results just come out very naturally, and like we systematically document what is going on with a large sample to investigate what this Wall Street Journal told us. So this is a very enjoyable process to investigate what is going on in the industry. And so a couple of things I want to emphasize. The first thing is, some of you may ask, why do you care about disclosure? Why is the disclosure important? So I think, to me, as an accounting faculty, it's kind of obvious to me, and the disclosure is like the language for business to communicate with investors, shareholders, or all the stakeholders. And also we have some famous example from Warren Buffett. His letter writing is fantastic. I learned a lot from Warren Buffett's annual letter. His language is beautiful, and the thing is, sometimes when you read his language, you can find that it's very sophisticated writing. Even for human being, you need to take a time to think of what's the meaning, what's the philosophy behind it. And so going back to our questions, so in the age of machine, when machine read the document, they rely on computational algorithm, computational textual analysis. How do you actually manager will cater to the machine readers versus human readers? This is kind of a motivation for us to start the project. And also, we find very significant evidence on the rising of the machine readership. We find a lot of hedge funds, they are using automatically information retrieval algorithm to search ADGA, and we have some software developed by the industry. They use the software to pass the SEC findings and extract useful information, and use the information trade on stocks. So we put in the paper some evidence that the readership from the machine readership is rising in the age of this data analytics, machine learning, and so this is some evidence we put out there just to help to support the paper. And so what is the research question, what we are examining here? So at a big picture level, what we do is, like I said earlier, how exactly a manager will respond to the rising readership of machine. And because the machine, like I said, the machine read the documents different from human, given the example Warren Buffett. And so how exactly the difference will drive managers to alter their reporting style, and exactly how exactly manager will actually we call it the feedback effect. So basically, when there's a machine readership, how exactly, what's the feedback manager receive from the audience, and eventually change their reporting style. This is at a big picture level what we are investigating. And so I break down this the paper, have an overview of the paper, and so you guys can see the whole structure and what is going on. And so the first thing is how we exactly proxy machine readership. So I was mentioned earlier a lot, there's a rising machine readership, hedge funds are using algorithm to passing SEC findings. So how exactly we proxy that? How we proxy the machine reader versus human reader? So one major measure we use is machine download. So this is also from the Tim's paper. And what we do is we proxy a big chunk of download at a very short time, which is impossible for human to download. And this is the proxy for machine download. And some of you may have a question: is really machine download proxy machine readership? And download doesn't necessarily mean machine will analyze the document, passing it and analyze it. So let's just hold. I'm trying to predict the questions. Just if you can hold for 1 minute. Yeah, this is hold for 1 minute, and I will get to that. Whether it's machine download really proxying machine readership. I want to first introduce something related on the manager reporting style. So we have three measures to proxy manager reporting style. The first one is machine readability. This is one measure we use in the paper. So I remember Tim, I don't know if you remember when we discussed this at the GSU, you were telling me that sometimes passing the document as isolated into different sections and tables is very painful, because it's sometimes even impossible to 100% exactly passing the documents and make all the make all the sections into the right place and make the unstructured data become structured. We were discussing about that point, I know you made a comments. You said a lot of papers actually just one line saying it's passed, and we want to see more like a description on how exactly people passing this. So this kind of touch on the point on that. So what we do is how easy, how difficult to pass the documents. So you can look at the example. I know it's very small. I'll have a bigger one later on. It's very small. So what you can see is this is a table. So this is a text. So for machine to separate the text and table here is very difficult. The reason is there's no tag here. Normally in a XBRL, if you tag is friendly, you will tag table here and the table here. With a tag, you can easily pass the table out from this document. But in this example, there's no tag in this document. It's for human being, it's nothing, right? You can read exactly what is going on. This is table, this is text. But for machine, it's completely different story. We have to, like, this is going back to Tim's point, we have to go through very painful process to identify what's the pattern for the machine to recognize this is a table. So this is so-called machine readability. We have a more detailed definition later on to let you know what is the machine readability. So basically the point is, if the machine can pass this easily, the readability is high. If it's difficult like this, the readability is low. This is different from the human readability, what we see before. It's not about language, it's not about complexity vocabulary. This is about how easy machine can pass the document. This is the first measure we see whether manager will adjust machine readability responding to the machine readership. The second one is move to the writing style. So this is not format, right? This one is about format, has no contents. So the second one is more about the content. So the content is like in the 10K and the 10Q, will manager change the writing style and change the language in order to cater to machine readership. So what we do is we want to see if there's the choice of words will change based on the machine readership, and the words that are sensitive to computational textual analysis. So this comes with the what the Tim's paper in the JF. I will discuss that momentarily. Just for this, I just want to give you guys a big idea. What we do is I want to see the choice of words for managers is changing because they want to cater to the machine readership. This is the about the context. The last measure we use is the style, the speaking style, voice. We use voice. So we have a lot of right now has the machine learning software to analyze the CEO voice features, vocal features. So we use this machine learning software and to see if the manager actually make the voice more friendly to this software. So basically, we trying to identify if there's a software there using machine learning to analyze the CEO voice, would the manager actually cater like more manager their voice features, make it more friendly to this machine learning software. So we have some anecdotal evidence here. I think is worth mentioning. We have some. We saw some article. Actually, there's kind of training camp for CEOs. So basically, these specialists, they put the CEOs together and they train them how exactly make the voice more friendly, make the voice more beautiful to the audience, to the machines. So it's actually in the industry, there's now trainers for CEOs to do that. And so these are the three measures we're using to proxy how exactly the disclosure, the manager change their disclosure catering to machine. Here goes back to my earlier concern. You guys may have some question, why is machine download proxying machine readership? So we use two measures to validate that. The first one is, I want to mention about ongoing one first. So the ongoing one is, if the machine download really actually proxy machine readership, what we can see is the machine download should be correlated with AI-based hedge fund ownership. So basically, we want to show that the machine download is actually driven by those AI hedge fund owners. So these AI hedge fund, these algorithm traders, these AI-based hedge fund traders, they actually drive the machine download. The reason we don't use this as a main measure because this is a smaller sample. We attract managers' background from the LinkedIn database, not LinkedIn, the LinkedIn website. So basically, we crawl. It's a data shared by a colleague, and so what they do is they get the manager's background from the LinkedIn, and from the background we can identify if the hedge fund is a AI hedge fund or non-AI hedge fund. It's a smaller sample, but the smaller sample can help us to validate the machine download, while it cannot be used in the baseline for the full sample. Okay, the second one we are using is to machine-like trading. So basically high-speed trading. So the idea here is, if the machine just download everything, just put there, and without reading it, we shouldn't see any trading activities. So the logic behind it is, if machine download the documents and also read it and also analyze it, we should see trading associated with the machine download. So that's why we use trading to proxy machine actually analyze the documents, passing the documents, and trade on these documents. And so we check the machine trading association with machine download and the machine readability, and yeah, we found that it supports our conjectures. We found that machine download actually associated with machine trading. That means they're not just downloading, they actually trade on it. Otherwise, there will be no trading activities. And the same thing for the readability. The readability also, readability also help with the machine trading as well. So this is just, I want to use one slide at a big picture level to summarize what do we do in the paper, and I we'll go to details in the following slides. Let me watch my time.
It's about
okay.
12 minutes.
Thank you. Yeah.
12 minutes come.
And a water break. Okay. So okay. So what exactly we use? I want to keep going on the contents part. So like I said, what exactly are words sensitive to machine? What is words sensitive to human? So this one, going back to the we used the LLM dictionary in 2011. So we know that a lot of academic papers use the LLM dictionary. Personally, I use a lot, and so now we have to dig into different evidence. How exactly the industry using them? So we also did some search on this. And you can see that a lot of actually hedge funds actually are using the LLM dictionary for textual analysis, for sentiment analysis. So we found some like evidence here, and there's more evidence we cannot list here. So what I want to deliver here is we may know that even before I dig into, I thought like this is more of an academic use of the dictionary, but unsurprisingly, actually a lot of industries practitioners are using these, because the dictionary is exactly catered to the financial reporting setting, versus other general dictionary is more at the general level, applies to all the settings. So this is one evidence I want to put out here. Given to the previous workshop, we received comments saying why using this dictionary, is that really well accepted in the industry? And we want to just present evidence here corresponding to earlier questions we received from the audience. And also I want to present it to Tim. I don't know, Tim, if you know this is something actually going on in the world, and I don't know if these people contact you or not, but it seems like they are heavily relying on the dictionary you are publishing. So another point I want to point out here is the parallel trend. I'm going to discuss this later on, but I want to move this forward just to show the what is going on of the parallel trend. So basically, the dictionary is available. We checked the SSRN post as well. Let's put that aside a little bit. Just see the 2011 is the publication year. From here, before, you can see that one is the use of the LM dictionary versus the Harvard dictionary is parallel. So basically, before the dictionary become available, there's no much trend. There is a parallel trend for people using LM dictionary versus Harvard dictionary. So after the 2011, you can see the spread gets wider. So after 2011, the not just academic users, also industry users, they are using LM dictionary as computational textual analysis to analyze the SEC documents in an automatic way. And you can see the spread, like for the high machine readership versus low machine readership, you can see that this group are more using the LM dictionary relative to Harvard dictionary, and we can see the parallel trend. So the key point here is the structure break among the 2011. We also checked SSRN as well. So this is not sensitive to that the year published of the dictionary. So so this is the some simple overall picture of the paper. And I want to also add something before I going back to some later point. So we are trying to document a feedback effect we think is new to the literature. So we know the traditional feedback effect is very well established. The managers learning the stock price, they get information from stock price. So what we have here is manager how exactly responding to the machine readership, how exactly manager read from the machine information acquisition and responding to it. We think this is something new we add in the literature, and we also strongly believe that this is not just one single paper. It will help to start a conversation for the future disclosure literature. People can add much more study into this. Yes. So I'm going to accelerate a little bit just for the sake of time. So we trying to say this is a new feedback effect from machine readers versus traditional feedback effect from the stock price. And also what we like the project and is most of even my project, what we do is we focus on the machine part. So we build a machine learning algorithm to retrieve information from 8K, 10K. So most of my other project is on the machine part. Like we build a machine, we build a machine learning, we build algorithm, we build the stuff, help investors to retrieve information from SEC, EDGAR, and 10K. So this we like this, the team like this project because this is on the other side. We are not talking about how exactly building a machine to retrieve information. This is conditional on their machine retrieve the information? How do manager respond to the machine? So we really like the pitch of the project is on the other side of the game, and we feel like there's not much stuff done in the other side of the game. Like even my project, most of I want to confess, most of my project is focused on the machine algorithm, how to analyze the 10K, 8K, and conference call. So we can do a lot. Actually, we can do a lot to focus on the other side of the story, the other side of the game. How exactly, what's the game theory, right? Is that when the machine rises, how do manager respond to it? So this is the angle we actually like in the paper, and we want to emphasize that. And I just want to go over very quickly some pictures, and I will conclude the presentation and some sites. So this is some general trend of the machine learning download. I think the picture also available in some other paper, in Tim's paper as well. So we see a rising trend using the pictures. And what we also see is the machine readability. Earlier, I show you guys how easy to pass machine, and we also have a general trend of the machine readability as well. So this is more of a big picture to see how exactly when the passing is friendly to machine, when the passing is not friendly to machine. I already spent some time earlier, so you guys get the big picture, and I will just keep moving, and you guys can see what's the details in the paper. And several papers. This is also I mentioned earlier. We validate the machine download. We find the machine download is actually reduce the trading time. So it's kind of they're trading. The download indicates they're not just downloaded; they are trading on it. And also this also have an interaction with the readability. And you can see that when the readability is higher, it facilitates the machine trading as well. So, and this is some tables I already mentioned earlier, and we break down. So we also break down the different measures of the machine readability, and to provide more information on this. And this is about going back to the Teams dictionary, whether the manager change their word choice relative to LM dictionary versus Harvard dictionary. And so we found a strong evidence that this is we also have parallel trend results. We found that after the publication of the LM, we found the dictionary use incrementally increased relative to Harvard dictionary. So the difference is significant in the post period. In the control group is the machine download, low machine download group. And so we also checked other stuff, uncertain words. We checked a lot of stuff. We found consistent evidence from the use of the LM dictionary after 2011. And also, like I said earlier, we also explore the vocal features. So this is out of sample because you can see that earlier we used the machine readability, which is about how easy we pass the SEC findings. And the second one, we use the contents, basically how exactly the word choice of the manager in the financial reporting. So this is the different sample. This is a voice sample, and it's kind of also painful to process these voice documents. It takes a long time, and but what we found is also consistent evidence. Managers actually change their voice and relative to the software vocal software analysis. So we control for a lot of things to find the evidence consistent with what we found. So this is I know I lost some minutes, but I don't want to take too much time from Tim's discussion. So let me just conclude. Thank you everyone, and I see a lot of friends come today. There's a big crowd, the audience, and I'm really happy you guys join us and coming to the paper. And I will move the floor to Tim, and I put several pictures here. So maybe one day, when in the real world, we can, like after presentation, we can grab some Sweden food after presentation, but maybe not this year, not a year 2020, but sometime in the future we'll do that. Yeah. Thanks so much.
Thank you, Sean. Yes, you're very welcome in Stockholm when things settle down. Meanwhile, thank you very much for the presentation and for the quick recovery despite the connection problems. So with that, let me pass over to Tim again. So please, you have 15 minutes. And you need to unmute your microphone. Tim, you're on mute.
It's always a good thing to unmute. So how can I be negative on a paper that says all these positive things about my work? But I found a couple of things that need to be addressed. Let me forward it. So I have 8 suggestions, comments. First step, we established that firms which expect high machine downloads avoid the Loughran-McDonald negative words, but only in the post-2011 period. This really disappoints me, this ability to avoid us. Bill and I went out of our way to include all possible negative words appearing in annual reports in our dictionary. In fact, I mean, look at that, 2,355 negative words. And then in preparation for this, I kind of look through and I go, hey, let me look at some infrequently used negative words. I meant, so here are 3: disgracefully, misstep, annoyed. I mean, misstep is really negative. I don't think that they're going to be using it too much. So I'm really interested to see which words are they avoiding. And then given we have a list of what, 2,355, a long list of negative words, I would have thought it'd be really challenging for managers to avoid using them. And so Sean put up in the presentation his figure 3, where they report the time series of Loughran-McDonald sentiment minus the Harvard sentiment. And you could see a big shift in 2011. But I would be interested just to see a time series of just the raw Loughran-McDonald negative word frequencies in a figure to see what are the negative words doing, not net positive and net the Harvard. I am not a big fan of the Harvard Dictionary. I think it's really poorly specified for business documents. And I always like to see this to assist the reader in understanding why the Harvard General Inquirer negative word list isn't so good. Let's look at some of the most frequently occurring Harvard negative words. Let's go through them. Tax. Everyone has to talk about tax. Cost. Same thing. Capital is a strange one. I don't know why that's a negative word. Expense, expenses, liabilities. These are building block words, aren't they? In finance, in reporting. How can I avoid talking about expenses or liabilities? Service, too, that's a strange one. Taxes. The last 3 are just silly, right? Board. I don't know why that's a negative word. So the Harvard considers anytime you talk about board of directors, oh, that's negative. Well, companies are going to have to disclose who's on their board. Foreign. If this was literature and we're talking about a foreign army about to invade, okay, foreign is a negative word. But in the context of business, it's talking about foreign operations, foreign profitability, foreign opportunities. And the last one is vice in the Harvard Negative Dictionary. Pretty confident that managers aren't talking about prostitution and gambling. I think they're talking about vice president, right? So therefore, I think the Harvard word list is pretty poor. Given the non-business focus of it, I just went through it. I was really surprised to see that machine downloads in the post-2011 period were positively linked with the Harvard negative word frequency. If you look at in the paper's last column of table 5, why would machines be attracted to documents with higher counts of this kind of non-business dictionary? In the text, The paper mentions that positive words are far more common than negative words in corporate reports. I just don't think that's right. I mean, certainly if you use the Locker-McDonald word list, negative words consistently have higher proportions than positive words. I mean, annual reports are really chock full of negative words. It's almost 3-to-1, 2-to-1, negative to positive. I have a little confusion about this figure, and I think it's kind of interesting. I mean, in the blue, we have the blue columns here, and machines are taking over the world. Look at the blue. The blue are machines downloads. They are just taking over the world. And then between 2015 and 2016, you see a big jump in machine downloads. They're very, very interested in that, in the Edgar filings. And then the red are percentage machine downloads. And those are machine downloads scaled by total downloads, so both machines and humans. And the question I have is, why in 2016 did humans all of a sudden start going to Edgar and being very active in downloading stuff? I mean, I think that decline is very strange given the huge march of the machines in the blue column. So I think managers are thinking, you know, Sean pointed out that those are the ones that are really downloading the Form 10Ks and Form 10Qs. I would have expected a upward trend in machine readability of public documents. But as shown on the next slide, as Sean put in his presentation, the readability, machine readability is really flat. So from 2004 to 2007, wow, a big increase in machine readability. But from 2007 to 2015, I mean, it's really flat. That really just surprises me. I would have thought a steady rise as more managers are kind of making their documents more accessible for machines, for parsing. I don't have a good sense of what machine readability means, probably because I'm not a machine. So in Appendix B, the 4 authors give the reader a nice example of kind of showing what's capturing with machine readability. But from a human perspective, I just don't see much of a difference between the 2 examples that were given. And so tying in with that, on page 18, the paper notes that other downloads, so these are humans. So humans are negatively and significantly linked to machine-friendly formatted reporting. Well, yeah, since most of these other downloads, right, are humans, why should there be any link between humans and machine readability documents, machine-friendly format? And so the question I want to ask is, can humans even decipher that the filing was made friendlier, to be friendlier for machines? Because in the example that's given, I really can't tell the difference. We're almost done. You know, I kind of like the finding that managers are increasingly using professional coaching to sound more positive and excited. As a researcher, if you ever listened in on some of these conference calls, especially for the large ones, I think they're making these conference calls like a staged event, like, you know, a theater production, something like the Emmys or the Oscars, you know? And I really did. I like that finding that managers are increasingly using professional coaches to do things right. Thank you for asking me to serve as a discussant. That's it.
All right, thank you very much, Tim. Sean, would you like to take a couple of minutes to respond to any of Tim's 8 suggestions?
Yes. So first, I'd like to thank Tim. It's a great discussion. I want to just quickly respond to several comments. Also, Tim, I want to pick up your brain too for some questions. I have some questions. Let's see if you can help. So first is several things I want to just quickly respond. We will thank you for the suggestion on the writing. For the positive words, we mean that managers just intend to say more positive words in the findings, so there's less information content about positive words. We'll make them more clear. It's not about it's about more about information content. And the second thing is for the machine readability. So the example I give you is a little extreme. That one is it's exogenous to is like completely for machine, not for human. But you can see the 5 components we have in the paper. It's kind of the measure we have in the paper. It will more heavily affect some machine, but it will pick up some human readability too. You can see some of the measures, like for example, if the table has the title and how exactly structured. So that kind of measure, in other words, it's very difficult to find a measure that is completely exogenous to machine readability and have no relation from human, because the example I gave is on an extreme case, but the 5 components we put in the paper, they're kind of heavily affects the machine readability, but also at some degree it affects human readability too. So that's the best we can do based on the measure. So that's why you see in a regression the other download also pick up some of the machine readability too. But you see the magnitude is different. The machine download pick up a lot on the machine readability. The other download just pick a little bit on the machine readability. So basically what I'm saying is it's more of a relative term. It's not like a machine readability for exclusive for machine. It's a relative to machine readability. The measure sensitive machine readability relative to human. So that's one thing. And the third thing is the same logic applies to the Harvard dictionary. So basically, what we want to look at is the difference between using a dictionary relative to use of the Harvard dictionary. So sometimes they pick the Harvard dictionary. There's some correlation, but we want to use the Harvard dictionary as the benchmark, as the one that like a non-machine is using. So the difference between the dictionary is what we're trying to focus on. So these are the 3 quick comments I want to just quickly address, Tim. And like I said, I want to pick up your brain. So the decline and the flat, that we struggle. Within the team, we discuss, we search news. We're trying to explain that. Do you have any institutional insights on this, and we can use like do you have any suggestions what's going on in 2016? And the flat, you can see that there's an increase on the 2007 readability. It's a little trend, but still, like you said, the trend is slow down. Do you have any insights help us that we can have more solid explanation on figure?
No, I mean, I think, yeah, machine readability. I mean, I think it might be changing over time too, right? And you have kind of maybe a more dated one, so you may want to update it. You know, think about that. I think it's a great idea, though.
Okay.
Yeah, right.
So at this point, I would like to conclude the official part of this seminar, let's say. So anyone who has time and would like to stay on, we can definitely continue the discussion on this interesting topic. But let me sort of officially thank at this point Sean and Tim for great contributions and for stimulating this this great discussion that we've had today. The series continues, of course. 2 weeks we have the next event, and just let me point out as well that for today, actually at Sean's initiative, we started offering one-on-one meetings as well. So if you've missed that information, that you can actually sign up to talk one-on-one to the speaker, please keep an eye out for this information next time you get a reminder. So with that, thank you everyone for attending, and we are now in unofficial mode, and we can continue talking.